Let me put this simply for you. This is a daily time frame. Price is dumping hard. This blue candle is Monday, so it's the start of the week. I'm looking for this Monday candle to close whereabouts it is right now, because if we do, we create sell side imbalance, buy side inefficiency. Why is that sell side imbalance, buy side inefficiency? Because we only had sellers in this imbalance and it's inefficient to buyers. So buyers need to come back up, rebalance into that price action and drop lower. I'm not considering price coming back up to this one yet, because we're going to have this one in mind first. If price finishes where it is, all I'm going to do is come down to a smaller time frame, find levels on a smaller time frame which price could magnify towards, find liquidity pools we could potentially take out, and wait for price to come into these areas and start to sell off. And there's a couple of reasons I really want this to happen. One being we would be inside a higher time frame point of interest area. The other being we would sell off above this red line here, which is the opening price for the weekly candle. If you are bearish, the candle is going to open where the red line is, potentially go higher to then sell off, meaning the end result would look something like this, and we would be able to take a sell above the opening price to where the weekly candle started, which is the best place to sell. You will never make it as a trader if you don't accept the fact that you are going to make mistakes along the way. But that being said, let me give you 3 tips that will help you on your journey and save you from losing loads of money. Number 1, and the most important thing ever, when you're learning, learn on a demo account. This is vital for all of you, because you are going to make plenty of mistakes on your trades and you're going to lose plenty of trades. What you see on social media isn't reality. You are not going to start getting amazing results from day one. You need to learn, and to learn in the best way without losing money, you can do it on a demo account. Number 2, you need education. For this education, you need to find someone you can trust. Do your due diligence on whoever it is that is going to teach you how to learn this skill. Look at their reviews, look at their content, and don't spend thousands on courses when you don't need to. And number 3, super important, accept the fact you are going to have to shift your paradigm and change the way you think. This is a tough industry that will require you to become the best version of you, and you need to approach it with an attitude where you accept that you are here to learn, and you accept that this is a marathon and not a sprint. Rome wasn't built in a day. You can become a great trader. You are going to make mistakes. Don't fall into the same silly traps that 97% of the people in this industry fall into. Do these 4 simple things to make your life as a trader so much better. When you come onto the chart, mark out the opening price. I'm going to use midnight New York time. Once you've marked out the opening price, make sure you are in alignment with the higher time frames. As you can see, we're inside this bearish fair value gap, meaning that you would support price to go lower, and we're now currently above opening price. So we're inside our point of interest area from a higher time frame. We're above the opening price. Now search for any kind of fair value gap that would support a bearish move. Once you've done that, identify targets. So I'm going to go to a higher time frame again, and the first thing I can see here are these equal lows as well as these lows right here. So now I've found myself in a higher time frame point of interest above the midnight opening price with a bearish fair value gap and a target in this liquidity here, which has given me confluence for a high quality setup. Use those 4 simple rules, back test it, and see for yourself just how powerful this method of trading can be for you. So what essentially is going to set me from you as a trader is that I do not care if this trade goes through my stop loss, because I trust the market. I am emotionless to the result in my trading because I trust the process. I understand risk management. I understand the investment of a trading business, and I understand that over time I'll be fine, and I am going to take losses along the way. What you have to remember that in trading, it's like any business. Any business is going to require you to invest. Think of that trade you are placing and the risk you are putting on that trade as your investment. If you risk 1%, you are investing 1% into your trading business. If you lose 1%, that is a business loss. But over time, because you are running a very good business model, risk management will ensure that your business model will make that money back and will make consistent profits in the market. I am just investing in my business to increase the value of its worth. By placing these trades, I'm only taking the highest quality setups. I'm doing my analysis properly. I'm using risk management. I trust my setups, and I'm emotionless to the result, which is giving me the strongest weapon of all, which is having the ability to press buy or to press sell. And that is essentially the only thing in this industry which is going to make you profitable.